To bring in Yan Liang. She's professor of economics at Willamette University. Yan, welcome back to the show. First, how do you interpret the foreign trade performance numbers in November? I noticed that a significant chunk of the exports was PPE, for example. Do you, in recent months, do you expect that to change as the vaccine starts taking hold in 2021?
Great to talk to you again, Roee. So yes, I think you're right. It's not unusual that the pent-up demand for holiday shopping season would drive up export growth. But China, in this case, is unusual for two reasons. One is, as you just mentioned, there is rising demand for what I would call pandemic-related goods, such as the PPEs, and also the home, school, home office supplies and equipment. So that's why you see there is a 21% increase in the PPE exports, and also medical equipment that soared by 38%. The electronic goods export has increased by 25%. So all of these are driving the demand for China's goods. On the other hand, from the supply side, the rest of the world is still battling with the pandemic, and China is able to ramp up demand and supply all these products. And so you're right, when the vaccine kicks in and once the pandemic is relatively under the control, then there will be less demand for these PPEs, etc., and other countries will start to increase their production and supply as well. But I think China's exports will still remain competitive as China continues to upgrade its supply chain and also build this regional economic and trade partnership. So I think China's exports will continue to grow, but maybe at a less impressive pace.
You mentioned that trade partnership, 14 countries and China signing the RCEP, the world's largest multilateral free trade deal. What are some of the benefits that might bring to China, and how long before those benefits are translated into concrete numbers on paper?
Right. So, it's going to be a gradual process for countries to lower their tariffs, right, based on their own needs. And I think that is very pragmatic, and this is the benefit of having these kinds of regional trade agreement where, countries will gradually tailor their steps to meet their own needs in terms of lowering the tariffs, etc. So it will be a long-term game. It will be gradual benefits that would help China to build a regional trade and build a regional supply chain, and it will be also helpful for all these other countries as well.
What sort of impact will the renminbi's appreciation trend have on foreign trade enterprises, and what sort of monetary policies, if any, might we see in 2021 as a result?
Right. So we have seen RMB started to strengthen, and now it's about 2.5 years that the yuan continues to appreciate, and that is very normal because China has achieved such a large trade surplus. Right, this month the trade surplus is 75 billion, and the year-to-date trade surplus now is 460 billion, both are record highs. So with the very strong trade performance, it's normal that the RMB appreciates. So this will have some dampening effects on exports, but it would also help boost China's imports. So I think, at the individual, firm level, yes, they need to take some hedge and some forward contracts, etc., to protect themselves against the RMB appreciation. But it is helpful for China going forward with the strengthened RMB and with the internationalization of RMB uses. We'll see China be able to attract more capital, more investment, etc. So I think the Chinese government also made a commitment to continue to liberalize its capital account and its currency. So I don't think that the PBOC will have very sort of drastic approaches or actions to stem the RMB's appreciation. So we're probably likely to see continue to grow stronger.
Looking back at 2020, COVID led to huge public spending in some countries. In the U.S., per capita debt increased by almost $13,000. In China, it was around $1,200. So presumably that positions China better post-pandemic. But how does that affect trade potential?
Right. So, I think for China, because it has taken many other policy measures to contain the virus, to stimulate demand, to improve public infrastructure investment, etc. So it really helps China to resume the normal production, etc. But for imports, usually that's a lagging indicator, just like the retail sales recover at a much slower pace than industrial production. Plus, a lot of the imports like services, tourism, travel, international education, etc., are off limits right now. So I think given time, China's imports will continue to grow, and so that would contribute to the global trade.
Yan Liang, Professor of Economics at Willamette University, thank you as always.